Okay. Good morning. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of getting through Friday alive. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. It's always a good idea to stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. My name is Wayne McDonell. I will be your guide on this journey we call Forex. So ask questions and get involved because you are the boss. And I am simply a humble servant that is here to share some of the skills and techniques and knowledge that I've gained over 20 years of trading Forex. And then 20 years approximately in the high-tech entrepreneurial startup venture capital world. And then I spent 4 years in the nonprofit world. Cool. So, yeah, so ask questions, get involved, take notes. I'd like to thank Daniel for posting notes every single day in the video description. That's really cool, huh? Time stamping and everything for you. But what you should also do is document your key takeaways in the comment section below the recordings, because then in the back office of YouTube, you can search your comments and find very particular, very specific videos. So if you said at this time on this video, he said this thing, and you timestamp it, you can just jump right ahead. So you can search your comments, find a particular video, jump to that one key moment, and now you have customized your Forex.Today experience. Okay? Gordon, no, we're going to fold all that in. Cool. So anyways, thank you for being here. Please like, please subscribe, please leave comments like I said. And then ultimately, I would like to invite you to visit Tradersway.com, open up a demo account, and see if they can earn your loyalty and respect, because you're going to need an execution partner for your Forex business. And the basis of that should be, the basics, right? Fast execution, right? Low fees, competitive swaps, all that's good, but ultimately it's trust that's needed. So reach out and develop that relationship, or at least start that relationship with Tradersway through the demo account, and see if they can earn your loyalty and respect like they earned mine. And remember, they earned mine not through promises or banner ads, but through their actions in a time of duress for brokers that put big brokers out of business. And Tradersway was fine. And I'm like, that's the kind of stability that I need. Tradersway.com. Cool. Hey, yeah, for those that got emails from me the other day and you click on it and it takes you to some website that doesn't work, you know what? I found there's an error somewhere. So I wrote the emails right. I programmed the links correctly. But now there's an error somewhere on my Cloudflare or my SendGrid or the SMTP server. But somewhere along the line, I write the email, I check the email, then I send it out, and then the SMTP server changed the links to a site that doesn't exist anymore. And I'm like, I didn't know. Because I wrote them properly. I double checked. I did previews. Everything worked fine. And then all of a sudden, a couple of days later, some people are like, man, these links don't work. I'm like, really? And I checked the email that you actually received. And of course, now the links go somewhere else. Oh, what is that? Like, what in the world decided to just... So the wonderful technology somehow actually changed the links. Isn't that funny? So the servers changed the links that I sent. So anyways, just go to Fxbootcamp.com now. It's live. Don't worry about the links. Just go to Fxbootcamp.com. If you try logging in and it says your password doesn't work, request your password, change your password, and you'll be golden. Just go to Fxbootcamp.com. So yes, I am planning on the 22nd of December, which I believe is a Wednesday. On the 22nd of December, for everyone that is access to the video courses or access to the swing trading group or access to the day trading group, basically every single person that's part of Fxbootcamp will be invited to attend my 2022 outlook. Yeah, my outlook for 22 is going to be on the 22nd. You get it? 22 on the 22. So I'll give you a forward guidance for the next 12 months. Okay. Now on top of that, okay, if you used to be a subscriber to all the video courses and now your membership has expired, I'm going to send you a sweet ass deal. So A, you can get all the new video content. B, you can enjoy the new website. But C, you can attend my 2022 Outlook on Wednesday. Cool, right? Cool beans, right? Cool beans. So that's that. Yeah, Jim's like, I wondered why they didn't work. It was amazing. Like dude, right? How many papers have I written at Harvard? 50? Right? I know how to write. There's no way that I accidentally put the wrong link in because I check, I double check, and I triple check. So it's wild. So now I'm copying. So to figure all this out, I have to have 3 different sites open. I have to have my domain account open. I have to have my SMTP account open. I have to have this other account open, and SendGrid and Cloudflare and my domain server and this and the email provider. So it's like 3 or 4 different accounts have to copy this, copy that, copy this, copy that, copy this, copy that. It's way beyond what a businessman would normally be able to do. And then it takes hours for the servers to update, and then you click verify and it don't work none. So that's where I'm at today. So screaming bloody murder. But it has nothing to do with the new site, which is just crazy. Okay. Oh, look at that. Maida donated $2. Hit the like channel. Why is it saying that at the bottom of the... Why does it say that? I had never noticed that before. How funny. You see that on the bottom? Well, then that was from days ago, too. Interesting. I have to see why that. Maybe that hasn't updated in a while, huh? Yeah, sounds like fun. Not. Yeah, and I don't have time for that nonsense. I really don't. But I don't feel comfortable hiring someone to say, well, here's my login for my domain stuff. Here's my login for my SendGrid. Here's my login for my Cloudflare. Here's my login for my email provider. At some point, you just feel like your pants are around your ankles and you're like, no, I don't like this situation. So I'm going to just figure it out on my own. Okay. I feel vulnerable with that kind of, right? Okay. Yeah, it's been streaming that, so I don't know what's going on there. What's going on? Maybe I'll Google that. I'll see what's going on there. All right. What time? 4 p.m. sounds about right, Pete. That sounds about right. Okay, so anyways, let's go back to this. Okay. So are you guys enjoying the rotation? There we go. Let's do a quick update. La 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 la. Nothing's right on tone. Okay, check that out. That's going the wrong way. Wah, wah, wah. Okay. Cool. So now there's actually some people buying 10-year T-note. Yesterday, they actually didn't, which is kind of interesting. If you look at what happened yesterday was... Okay. And so this red line is basically the open and the close. And you can see yesterday, nothing happened. Okay. In the 10-year T-note market. But you might say, you might have, experienced like a crazy day yesterday, like NASDAQ. Okay. Let's do 5-day to try to shed that in there. NASDAQ, for example, looked like this yesterday. Just a humongo drop. Okay. Just a humongo drop. Okay. Down 4%, dude. NASDAQ down as much as 4% in a day. But, as I just mentioned, yesterday nothing happened in the bond market. So some people now have bought some 10-year notes, but not yesterday. So it looks like some Europeans, because obviously Americans were fast asleep. So people in Asia and people in Europe bought some 10-year T-notes today. And part of that is due to this rotation. Because you can see the S&P 500 was down a little bit. The Dow Jones was flat yesterday. So the big multinational corporations weren't sold off yesterday. The S&P 500 was a little lower than flat. So some things came down, but other things went up. And it was not a significant day in the S&P 500, not a memorable day. The bond market didn't move, but the tech-heavy, growth-heavy NASDAQ did drop. You guys might know Ark Investments. They're now down as a fund. They're down 13.5%. And based on what happened yesterday, what I think is happening is a rotation, which means Dow was flat, S&P 500 was hardly anything interesting yesterday. NASDAQ was crushed. And what that means is there's something inside of high-tech growth companies that changed yesterday. Okay? And what I've been talking about the last few weeks leading up to this is something called rotation, where the upcoming rate hikes change the type of companies that would benefit from that type of economic environment. And so there are professional money managers that are moving out of those stocks that have performed very well the last couple of years. And now they're going to move into a new type of stock over the next couple of years. And, the cliche is they sell off some growth stocks, which means they sell off the NASDAQ, and then they buy something else, like maybe a bank, maybe a European company. They certainly don't want to be in cash because we have high inflation levels. And even if you buy the 10-year T-note right now and you lock in 1.4%, you're facing a 5, 6, 7% inflation rate. So you're getting destroyed by inflation. So that technique is a dog with fleas. So somebody's doing something on the short run. Okay? Whoever bought the 10-year T-note yesterday is just doing something with their cash. But I think very quickly, in the next day or two, certainly in the next couple of weeks into the new year, they're going to have to then buy back into something, but not likely NASDAQ. So like Ark Investments, for example, 12/14, that's a couple of days. I want to get something from today. I don't want their fund. I want some news on them. See, I don't want their... This might have it. Okay. This is showing the rotation out of, so basically Ark Investments, Ark Innovation, they're very much growth tech, right? All growth, all tech. And look what's happened to them. And yet the stock market isn't down significantly. The bond market is trading sideways over that period. I mean, it was 1.8, so it's one. So anyway, so people have been buying some bonds as this has been happening. Okay, year to date, they're down 26%. Year to date, down 26%. And based on what I saw yesterday, again, Dow flat, S&P 500 slightly negative, bond market flat, but NASDAQ down 4%. What tells me is Ark is going to continue to get crushed for a while as investors get out. Okay, as investors get out of growth, and then they look for something else like value, like international, so on and so forth. Okay, so what I've been teaching the day trading group and somewhat the swing trading group, you will be judged by how you handle periods like this when we're in between trends, right? And in this case, the stock market dropped 4% in the NASDAQ, but actually the fundamentals behind the market in general are exactly the same. But the type of investments you would make based on the future expected environment changes. So it's just how you place your money is changing right now, but not the money itself. It's not like I expect all the money to come out of NASDAQ and go all into the 10-year T-note, dropping the yield back below 1%. No. You sell Facebook and you buy Bank of America. Okay? So anyway, so some of that's happening now and we call that rotation. And some of it's going to happen in January and we call that rebalancing. It'll look the same, but there's different reasoning behind it, right? And so it could get very interesting, and yet none of this has to do with the fundamentals. Okay? Yes, sector rotation. Okay? Okay? So you might, let's say, for example, sell off NASDAQ, but you buy the Russell 2000, which are smaller, small and mid-sized companies that maybe or maybe not will do well. I'm not suggesting that as an investment, but you think about that, right? So probably about 6 months ago, I looked at the rate of inflation, that it's coming. I still thought it was transitory. Now the Fed says it's not transitory. I still think it's transitory, but nonetheless, inflation is inflation, right? Whether it's supply side or demand side or both, when the government spends trillions and trillions and trillions and trillions of dollars and gives people money for free, like the Roman emperors, right? Throwing beads and bread to the crowd, I say that's going to cause a problem. So 6 months ago, I bought European banks because I thought in 5 years, Europe will have its act together and maybe start steepening its yield curve. But in America, I bought liquor stores, I bought prisons, right? I bought dollar stores, and I bought old folks' homes. And I thought all of those things are going to do well in an aging population with higher inflation. Okay? Isn't that interesting? Because if you need more dollars, if you have to stretch your dollar out, where are you going to go, right? And when the economy is bad, if anything, you drink more, you just drink cheaper, right? But the thing is, the one thing that'll perform in a high inflation market is you're going to buy your booze, right? So anyways, but look at this though. Maybe some of these high tech companies are overvalued. And so this is an example. I think this fund was rated number 1 last year, 5 stars. And this year, the market changed. The next few years are not going to be like the last few years. And they went from number 1 to negative 26.2% for the year. Dude, they're right? A drawdown like that gets you fired. And sorry says, why 10-year T-note go down? No, I said if that happened, but I don't expect that to happen. Okay? Boxed wine for the masses. So anyways, but that's what I did. But do you notice like buying liquor stores and prisons and old folks' homes? That's not buying Facebook, Apple, Amazon, Netflix. Okay? You see the difference? And let me just say, those investments are not down 26%. In 6 months, they're up like 10 to 15%, which ain't bad for 6 months. Okay? So anyways, but the money is not leaving the market. That's my big point here. I want to make sure I say that clearly. I don't think the money is leaving the market. It's leaving the NASDAQ. There's a big difference. So if I was a financial advisor, like a wealth manager, I would take people out of NASDAQ in an environment in which interest rates are going up, but I would still buy the S&P 500. Okay? Does this fund have any diversification? No. It looks to me, if we look at their is there a construction here? It doesn't show the construction. Anyways, if you look, portfolio, maybe this is it. Okay, 92% American companies. Okay, no cash, no fixed income, very, very little international. Okay? High volatility, low yield, high growth, and right? 20% telecom, 30% technology, right? 33% here. So 1/3 healthcare, 1/3 technology, right? 20% telecom, and that's it. But then if you break it down, Tesla, Roku, Zoom, Coinbase, okay, Spotify, Twilio, I wouldn't expect that to have much diversification. I think they would all be negatively impacted by rising rates, for example. Now, maybe Zoom will do better if we get another shutdown, but we're not going to get another shutdown. Yes, people are allowed to work from home, but it's different from the government shutting things down and corporations locking the doors. And buying Zoom now, you might find, even though it's down 55%, it still might be too expensive. Look at this, Teladoc down 73%. Oh, sorry, no, I grabbed the wrong one. 53%, 55%, 32%, -28%, -29%, -40%. Talk to me about risk management. Talk to me about diversification. And I think based on this, right, it's not going to get better anytime soon. Okay? Interesting, right? Interesting, right? So this one's going to get crushed, but what can you learn about this? This is the number one investment fund, number one ETF last year. They threw all their eggs in one basket, basically. You can break this down to high tech and maybe, lockdown type stocks. Okay? And what can you learn? Well, there's no risk management. You could probably do better than that. And how do you think the fund manager, the portfolio manager, Kathy Wood, how do you think she feels right now? Because like I said, if the rotation right now is out of those types of stock, and she's already down 50% in many of those cases, she's going to go from first to last, huh? Because if you ain't first, you're last. So if you want to get rich, you throw all your eggs in one basket and bet big. But isn't that also the path to getting poor? Okay? So we don't want to do that. We don't want to do that. But I did want to just make the differentiation here that this is rotation, but not a market collapse. It's a change in market, okay? Or let's say shift in the market, but not a change of the market, okay? So it is true, if you want to get rich quick, you bet big on one thing, because diversification guarantees that you don't get rich quick. Okay? Well, Joseph, what she'll just do is launch another heavily weighted fund somewhere else. Okay? Or because the media pumped her up so big, she probably pocketed $25 million over the last 2 years because she bet on one idea with other people's money. It did really well. She paid herself. Now it's really doing really bad. People will leave, and she might be a laughing stock for a year. 3 years later, people will barely remember her name, but she'll have a $25 million apartment. And she'll say, yeah, man, that was a great run. I think I'll take a bubble bath out on my rooftop deck. Huh? Bottles and bubbles for her. Okay? So whatever. Okay? Stay calm. What's the plan, Stan? Okay? What's the plan, Stan? Okay. Will the market grow? By grow, I mean up? Well, that's what inflation means. So the stock market, I would expect to still go up. Even though the bond market, the 10-year T-note, people bought it today. If I'm right on my rotation thesis, then they'll also get out of that 10-year T-note fairly quickly. They just don't want to be in cash. Okay? So they'll get out of that. Maybe today, maybe tomorrow, maybe next week, maybe early next year, but they'll get out of that 10-year T-note. Okay? They have to if they're fund managers. Jim says, with that much AUM, it might be hard to change direction quickly. Well, yes, but isn't that what her job is? Let's see, Jim. If your investment is down 55%, what does that say for risk management? Okay? Right? But, I don't know. The funny thing is, she tends to pretend that she's a venture capitalist, and she's like, oh, well, we bought into this, oh, it's all about 5 and 10 years from now, they're all going to be market leaders. Dude, are you a venture capitalist? You paid 22 cents for a share? No, you paid $122 for a share. You're not a venture capitalist. Okay? So anyways, I would look at a fund manager like that and say, well, yes, I was investing into you because you were going to get me growth opportunities, but I also expected you to manage the risk. So it's one of these things where you look at someone's Sharpe ratio and, yes, she lets her winners run, but she also lets her losers run. And I would look at that and say, no, thank you. Yeah, no, she's feeling bad for sure. So the way I teach you guys is, if you lose 3 trades, negative 33, you've lost 1/3%. That's the basic sort of math. So your trades are small. You want to build upon winners. You never gamble. You never bet big. But when it works really well. And when things are not working, it's recoverable. You're keeping as much powder dry as possible. And even after this math, 33 losses, 33 pips lost 3 times equals 1/3%. But even then, soon as the shit hits the fan and it ain't working well, then you drop this even significantly more than that, right? And now it takes 10 trades, of negative, let's do it this way. Now it takes 10 trades at negative 33 pips to equal 1/3%. Why? Why would it be so low leverage? And by leverage, I mean lot size relative to your account size. Why would you go in that small? Because it ain't working, son. Oh, I need to double down and go big. Show the market who's boss. Nope, never once said that. I've never tried to outsmart the market. Okay? I never hold on to losers. I only hold on to winners. Yes, it's kind of slapped me in the face a couple of times in the last 5 weeks, but the volatility has been redonkulous. I've had some really good winners that came all the way back, but it's rare when you're up, triple digits in a day, and then the next day it's down triple digits. You're like, holy crap. But there's been technical changes, still didn't work. There's been fundamental changes, still didn't work. You're like, wow. But, right? I will survive. Right? Right? Now you just got to hide, man. Keep in the game, but protect your assets too. But when you get a trend, a logical, intelligent trend, you tend to do very, very well. When the logical trend diminishes, you tend to do less good, but your losers, by definition, are smaller. And that's important. That is so important. Okay? Okay, that's so important. So important. So important. Okay? So important. Cool. So here we are. Here we are. Wowzer, huh? 3 weeks. 3 weeks and nothing happened. Okay? I'm going to ask you a question. I know you know the answer, but I want you to psychologically recognize this. I want you to speak to your subconscious here. So I want you to actually think about it, type it out on the keyboard, okay? But I want you to sort of emotionally connect with this, okay? How many people have heard me say your biggest losses are going to occur when nothing happens in the market? I want you to answer that. Literally, think about it, reach out and type. That your biggest risk will occur when nothing happens. Okay? Okay. Now, some of you might say, well, I'm a pure technical trader and I caught some of these and you did really well. Good. Okay. But there'll be times when that will not be the correct strategy as well. So I'm not poo-pooing on that. And if you're making money, that's good. I'm happy for you. But I want you to still recognize if you're feeling really good or if you're feeling really bad or if you're very confused in the middle or you're trying to say, oh man, well, maybe this doesn't work and maybe I need to try something new. Okay? You got to be very, very careful. You don't want to throw the baby out with the bathwater. I want you to recognize that if you go back year after 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 year of trading history, looking at November and December, okay, you will not see this. I want you to recognize that. You will not see this. I want you to recognize that. You can go back 20 years. You will not see a pattern like this. So if you're frustrated, I don't know if you are. Again, if you're elated because you've been day trading the heck out of this or scalping the heck out of this, then that's really good. Okay? But for everybody else, okay, if you're frustrated, if you're upset, if you're sad, if you're depressed, if you're down, I want you to look at this and say, well, there is something you can learn from this. This occurred. This really happened. Okay? And even 2 or 3 weeks ago, I've asked people, I said, look, learning how to take losses is key. I said, if you're losing money, make sure you lose money with style and grace. I said, you will be judged by what happens during the bad times, not the good times. So if this is a challenging time, make the adjustments so that you feel comfortable explaining what happened to somebody in the future. When they're like, what the hell happened here between November and December 2021? And you'll say, oh, well, first of all, great, Omicron. Second of all, radical changes of policy at the Fed, okay, which created rotation. And here's how I handled all of this. I cut my lot size. I traded less. I waited for more conservative setups. I got out. All my losses were small. I tried to let all my winners run, and they all collapsed on me on break even. So, yeah, it was a challenging period, but I protected the capital and I acted appropriately. Okay? That kind of stuff. Like, wow. But the other thing, if you're feeling down and depressed and upset, whatever the emotion is, you have to understand this is the unusual period. Okay? This is the unique, unusual singularity in the price-time continuum. Okay? Okay? Ahmed, email me, but most likely if your membership expired, then you're not in the database, because I only moved all active members into the new database. So if you had a video only membership and it expired 6 months ago, yeah, you're going to have to re-up. But email me and I'll double check. Okay? Because, like, for example, quite a few people bought annual memberships last year. and they're trying to log in now. I'm like, yeah, but the year's over, right? Like, you bought it a year ago, it's now over. So now you got to re-up again, right? And that kind of stuff. And so I don't have an annual membership this year. I only did it last year. But you know, so anyways, email me and we'll figure it out. Okay, so anyways, I want you to make sure you got your head screwed on straight, okay? It's not you. It's not the strategy. You don't have to like go try something else. Okay, what's happened is this. Okay? And that this time of year, that's very unusual. But the patterns that you might have picked out of this, and it goes all the way back to what I always teach. If you were simply just bullish or just bearish, there have been good trades. They just didn't follow through. So I think bears are frustrated with this. I think bulls are frustrated with this. I think currency traders are frustrated. I think bond traders are frustrated. I think equity traders are frustrated. Okay? Okay? Same thing, Jen. If you're requesting an email and you don't get it, it's because you're not in the database. You're probably expired. But nonetheless, email me. Yes, I will be. It's just easier to email me. What group are you trying to get in, David? Swing trading or day trading? Maybe it just saves everybody time if I just give you the links now. Let's see, that's blue sky. I gotta move out. What do you guys want? Let's just do it now. Okay, swing trading group or day trading group? What do you want? Excuse me. Yeah, Milos, yeah, but it is, right? Well, there's only one, David. So your day trading group includes the swing trading group and includes all the videos. It's all one membership now. Okay. Oh, then, yeah, Ahmad, then email me. I'll take care of you. I'll find out what's going on. All right, so let me get that for you. Okay, this is for everybody that wants to join the day trading and swing trading group. It's all one price now. There's not two memberships, there's just one. That's it right there. Jan, then I will give you access. I've already emailed everybody. But if you bought it more than a year ago, yeah, then it's expired. But I'm going to give you a ridiculous, sickening offer you can't refuse. Okay. Yeah, and I already talked about David. There's a server error. I don't want to talk about it again, but I got you. So I'm trying to work on it. Good. Right on, Ahmad. Well, your customer, I literally sent an email with the top 6 or 7 questions, one of which directly answers that question. It says, I'm a swing trader. Do I have to join the day trading group? No, right? So anyways, so that's all in that email too. All right. So hang on, I can't see. Okay, so let me. Oh, I still can't see. Cool. So that's that. So I just want to make sure your head's screwed on straight. Okay. We're looking at now trades for next week. We did this in the swing trading group yesterday. Okay, and some of our opportunities are in line. Yeah, email me, Wayne at Fxbootcamp. Okay? But if you're going to join the day trading group, just do it here. Let's do it. Okay? So you can see we're still in an okay position. But this is hard to stomach for sure. But has anything changed? That's what I want you to ask. What was the basis of your trade to begin with? And you're like, well, Wayne, I think the worst of COVID's over. Omicron's not that bad. The economy is going to grow next year, albeit with higher interest rates and some inflation. The Fed is doing its best to get things normalized. Maybe the supply chain is going to improve a bit. I think maybe inflation will come down a bit, but the stock market will continue to grow up and the yield on the 10-year T-note will rise. And I'll say, well, great that you thought that on Wednesday, but now that it's Friday, you're not sure anymore? That's the point I'm trying to make. Like, you thought that on Wednesday, but now on Friday, you're not so sure? Well, then you don't have conviction for your analysis. Maybe you just listen to me and you're like, well, that's what Wayne said. Well, then you won't, deep down inside, you're not going to have conviction for that. You're going to like, well, he's just a YouTube guru. What does he know? Right? Oh, Wayne was wrong. It's not about me. So what's your conviction? What's your outlook? Do you have a 22 outlook? Think about that. Do you have a 2022 outlook? Are you going to build a PowerPoint presentation? Okay. Do you think I'm doing that to impress you? No, I'm doing that for me. So think about that. I'm going to go through and reevaluate my analysis and to make sure I still have conviction. Cool. So if you bought it here and now you're not so sure, right? Then you threw out your analysis in 1 or 2 days. Like, that's it. Okay. So how about this? Are you going to do this? Okay. When people ask me about being a Forex trader, I said, you have to know everything. And accurately predict the future every single day. And I said, besides those two things, it's easy. David, there'll be pre-Europe, pre-Asia. Think like maybe 2 a.m. New York time, 8 p.m. New York time. Right. So we don't have a time set, specific time. Okay. Cool. You see this, guys? So you have to know everything and accurately predict the future every single day. So what do you think's going to happen here next week? Okay. And that is that. Euro, okay, total collapse. Ugly tuliumum. Okay, but back at the bottom of the range. What do we know? Well, according to our meeting yesterday, 128 is an area of opportunity, otherwise known as an AO. Roger that, Euro Yen in the AO. Thank you, Overlord. Sorry, thank you, Overwatch. Okay, cool. Okay. Something like that. Or you think we're going to drop like a ton of bricks? I don't know. If you think we're going to drop like a ton of bricks, you're going to sell it high. If you're going to be a buyer, you're going to buy it here. Maybe here. Okay, but plan A is basically where we are now for a bull bears are going to sell it higher. Okay? And pigs get slaughtered. Okay? Okay? All right. This one, I don't know. It's hard to watch. Hard to watch. I feel bad for CAD because I want to buy it. So let's take a little bit longer view of this one. Okay. See, that's dangerous, but look at the bearish point of view. Shalaka-laka. Yeah. That's dangerous, man. So that's the bears sold, and their target is 76 and a half, 76.50. Bias pivot, bearish mode, excuse me, and midpoint, true. That'll give us our conservative. Okay, target. Okay, you'll see conservative target 77.38, aggressive target 76.31. Holy smokes. But for those that are bearish, they had to wait 2 weeks to get an entry. You see it? It's actually labeled bearish selling zone. Profit target conservative. Profit target aggressive. So somebody had to wait weeks for that setup. Patience and discipline. Huh? Patience and discipline. So good for them. Amazing, huh? And what about our biddy? Just another asset correlated with risk on and risk off. A lot of people went into crypto because they said it will help diversify their portfolio, and it has not. Huh? Yeah, Chand. Right. So if 365 days have gone by, then yes, your membership is expired. Okay. Unless you thought it was 100-year one-time, membership, a 100-year membership. But I can't promise you 100 years from now my server will still be active. I don't think I'll even be alive in 100 years. Okay. So anyway, so here we are on gold. What, that it'd be a 100-year membership? No, I can't do that. Okay. Look at this, huh? Gold is on the central right now, and there's not much of a slope. In the longer run, the slope is down. On the medium run, it's sort of up, and so basically the whole thing's neutral. Okay. Now, the interesting thing, like, guys, like the macroeconomics course I just added to the training, 13 hours more work. Much of that information I learned straight out of my macroeconomics class at Harvard, which cost me thousands and thousands and thousands and thousands and thousands of dollars. Right? So, you know, the Fxbootcamp fees are tiny. They're tiny. Maybe they're significant to some, but they're tiny compared to others, right? So it's tiny to learn those same concepts. And guess what? When the class is over, you don't get to just sit there and like do the lectures again. No, once the class is over, you're out. It's done. So I went through and I added up the hours of lessons. And it was like 65 or 66 roughly, because I had to like, this video is 45, that one's an hour and a half. And so I roughed it out, but it was about 65 hours. So I changed the website from 35 to 60 hours, right? And then I added this at the bottom. Brand new course, macroeconomics, right? So that's fxbootcamp.com. But yeah, so it's redonkulous. And wait until I'm gonna add some quizzes and stuff to those courses. White Rock says if price structure is riding those moving averages, no statistical edge in play the equilibrium. Yeah, well, right now there's nothing here is what this chart says. Brinsley, I think technically that's illegal. I'm just saying. Yeah. All right. Yeah. I want to show this. This one's worked out really well, actually. Okay. And there's a lot of boot campers now that do trade Mexican peso. And there was a time when nobody would trade it because they're like, oh man, but the spread's like 22 pips. And I've convinced a lot of people that it might be worthy of your attention. And it's been one of the better performers lately, right? Yeah, I've lost as much as 22, but I've probably back down to 20 pounds. So anyways. Okay. It's been a better performer. Now, a basic swing trade is buy here and exit there. Amazing. And this is a Wednesday, which I prefer counter trend trades on Monday or Tuesday. But then, of course, we have this big move here based on the change at the Fed. And wow, Mexico's been very happy with this process. And again, they're benefiting also from nearshoring due to the supply chain challenges. And Rand double topped 16 something, huh? Yeah, it's a nice high yielder, right? Carlos said, English subtitles. I don't know about that. I don't think so. I don't think so. That would be a Vimeo thing. I don't think so. No. Sorry, Carlitos. So anyways, we're stuck at the top here. And notice how we had a lot of like yen pairs that look like this. Not too different, huh? And in fact, in that scenario, that makes a lot of sense. So if we can get the yen pairs to go up, this would come down. Della says, Wayne, do you know that there are a lot of Harvard macroeconomics courses online on you? Cool. Right on. Right? Cool. I sat in the auditorium in the science building. They only have the new one. So here it is. What is this? So this is the science building. And, right, the library in here is pretty good, and the cafe is pretty good. But right about here, you walk in the door, and these are auditoriums where you walk in, and there's seating for like 300-400 people. And it's not the first one. You have to go around the corner. And the second one, I think it's Auditorium B. And I've studied up in these halls. They're quiet. It's a good place to study. Nobody goes up there because they're just labs. ugly building, of course, but this quad is pretty interesting. So in this quad, they have like food trucks and all that kind of stuff if you just want to get stuff. And they have ping pong tables set up, and there's usually giant chess boards, and there's activities going on, a lot of hustle and bustle. But anyways, so that's where I learned my macroeconomics, not YouTube, not edX. Cool. Move there. Man, it's Friday, man. I'm kind of burnt out. Gee whiz, I need you guys to take control. Do you have questions? I'm burned out, man. Holy smokes, eh? Yeah. I feel like I'm going to get bitchy pretty soon. It's been a long month and a half, actually. Yeah. Boo, 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 boo. Boo, 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 boo. Time for a Christmas break. I don't know about that. Dude, I'm so busy today. Things are not going to get done. I have to go through and choose the things that are not going to happen. Darko, no, we're not going to do day trading next week unless it's warranted, and maybe I'll throw out an emergency meeting. Swing trading's done because the next meeting would occur basically the day before Christmas Eve. Like, that doesn't make sense. But I'm around, and then on Wednesday I'm going to do a special event for any member of Fxbootcamp, video member, swing trading member, day trading member, everybody. Just got to be a member, and I'll do a special outlook for you guys. That's the plan. Am I done trading? No. My job is to seek opportunity and manage risk. Ravi says, can you please guide us trading futures with the 1 hour bias pivots? No, I don't use 1 hour bias pivots, so I have no idea. Okay? If your trade is only good for an hour, it's not a good trade. Okay. Like, one way of looking at it is, how much money could I possibly make being in a trade for an hour or two? And then what kind of stop do you have? And when your stop and your limit, let's say your upside potential, are roughly the same, then your Sharpe ratio sucks. Do you think we'll get a Santa Claus rally? Well, saying it differently, I think people that have rotated out of growth will rotate back into value or some other type of investment vehicle. And that may kind of look like a Santa Claus rally, but nobody's like, oh, good, New York City's shutting down. Let's do a Santa Claus rally. No, it's more like people need to change and say, growth is done, the recovery trade is done. Now we got to look at, small and mid-cap stocks. We need to look at fintech. We need to look at something else than riding a bicycle in front of a mirror and valuing the company at $27 trillion. Okay. So a Santa Claus rally? No, that's so not this year. Okay. Like I said earlier, this is not a typical year. Okay. But there are still opportunities. Like, for example, after the Fed meeting, the dollar got strong for a little bit, and I drew this line and I stopped the market from falling. Well, this is important because now we're eyeballing that. That was a critical moment in time. And so what do we have here? We have a swing long right here. So somebody's asked me, so am I done trading for the year? Shut, bro. I'm probably going to get long this sucker. Although I'm more dollar bullish now going into the end of the year than bearish. But that is a technical opportunity. We did get a higher high. One might expect a higher low. We're set in the swing zone. We're on 71.50, right? Off of a higher low. So this was lower low, high, higher low, higher high. Dude, I kind of have to be here. I kind of have to do it. Okay? So just because this is a weird time of year doesn't mean I give up. Now, look, if I had 5% in the stocking, yeah, I'd probably just let the winners run into the end of the year and hope for the best. But right now, Daddy's got to go to work. Daddy's working overtime. Okay? Daddy's working overtime. Matrix, what about dark pools? Well, those are for basically illiquid. Well, not really, but that's for, you can't even call it a broker. But imagine some sort of financial vehicle, let's say a giant bank or something. Okay, and you have this dark pool, and you have clients, whatever, and this dark pool, and this client says they want to sell, this client says they want to buy, and the bank could be a broker and take the sell and send it out, right, and fill it, and then the bank could take this one, send it out to the market and fill it, or they can just match them in their pool, and the trade is made, but it doesn't hit public markets. And of course, in between, the bank, because they're scumbags, right? More Harvard scumbags. They're going to mark up the prices and front run a little bit and find a way to make money off of that. But whatever. The buyer and the seller are matched internally. Or it's sort of a form of B-book where the client says, yeah, we want to sell this because we're afraid. And let's say it's Goldman Sachs, and they're like, what a bunch of idiots. We'll take the other side. And they'll act like a market maker. But it's all done internal of the bank, and it doesn't go out to the exchange, for example. They don't send it to the exchange. They act as an exchange. Okay. Flashing orders is much bigger of a problem than a dark pool. Okay. So if you think like bank in Manhattan, bank, bank, bank. This is NYC. Okay. And over here you got New Jersey. And you have the BATS exchange. Okay. And this bank says buy Apple. Okay. And the order is sent to BATS. Well, New York City is old. And when we say send, we mean over the internet. And by over the internet, we mean fiber optic cable. So this bank, the fiber optic cable goes under the building, and it goes here, 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 right? Crosses Jersey, and then it goes here, and it goes here, and goes here, and goes here. And it takes 0.0275 seconds. We call that latency. So somebody could sit on this exchange and say, oh, this bank, we'll call it Bank of America, when they send an order in, it takes that long. It's like a thumbprint. Now, the bank next door, let's say JP Morgan, okay, is right next door to Bank of America. So you'd think it would take just about the same, right? No, that building does this. And it takes 0.00176 seconds to hit the BATS exchange. And so if you're watching the latency on the order flow, you can say, oh, we know this is JP Morgan. That's Bank of America. So you can sit around watching this order flow and the latency. And of course, you can have a computer that does all this. And all of a sudden you're like, oh, well, there's a big Apple order for 1 million shares coming through from Bank of America. Okay. Now, these banks also have figured out a way to save money is to fill the orders with the cheapest, right, fees. So they look at the cheapest exchanges first. So what'll happen is they'll say, fill all the orders here and then go somewhere else. So now over here, there's Renaissance. I don't know how to spell it. Renaissance, right? Technology, whatever. Okay, big hedge fund. And they're watching this on BATS. And so they flash a cheap order here for 1 share of Apple. But they get to see on BATS that the order came in for 1 million shares. So they'll sell 1 share of Apple to right here, but get to see that there's 999,999. Okay, so they'll set that order up here, but they already know the order's there, and then they'll buy the shares and then sell it over on this exchange to Bank of America, but they already know they were guaranteed 1 million shares. Sorry, 999,999. So they'll see it come in, buy it, and then sell it to Apple in less than sell it to Bank of America 0.000125. Okay, in 0.000125 seconds, after seeing the request from Bank of America to buy 1 million shares, they buy the shares and then sell them to Bank of America. So they flash it here. Meanwhile, they're buying it, and then 1/1000th of a second later, after buying the 1 million shares, they sell it to Apple at a slightly higher price. Not sell it to Apple, sell Apple to Bank of America for a slightly higher price, making 1/100th of a penny per share times 1 million shares. But they already know the money is already there. They already know there's a buy order. So it's 1 million shares at $200 each. There's a $200 million order. So they'll buy it for $200 million, knowing the order's already there. And then in a thousandth of the time it takes you to blink, they buy the 1 million shares and sell it to Bank of America for slightly higher. Okay, maybe making a penny, let's say. 1 million pennies. But they already knew it was there. It was like guaranteed money. It's a form of arbitrage, basically, right? They buy it, and at the exact same, within 1 second, within a millionth of a second, they bought it and then sold it to Bank of America for a higher price. That's much more of a problem to me than a dark pool of matching buyers and sellers outside of an exchange. Instead, the bank is just matching client with client. Now, of course, the bankers can be unscrupulous and take advantage of this and make some extra fees, or maybe hype it up and get people to sell because they need a buyer, or vice versa, right? They have a seller of a stock, so they call all their clients like, you need to buy this stock, right? Like, there's things that can go wrong, but that is close to me as insider trading. It's not insider trading, but the Renaissance wouldn't have made the trade if they didn't know the money was already there. So it's a little bit unfair because you and I could never do that. Renaissance is plugged right into the exchange and stuff like that too. And so they'll flash this one. And in fact, what happened back in the late 90s is once Renaissance and other firms figured out if they can see the order flow, and this is kind of like a market maker stuff that we have now with, you remember Robinhood? People used to say it's free, and I used to bust out laughing. I'm like, oh my God, you think that's free? Oh my God. No, you're getting raped and pillaged. They're just not having the courtesy to tell you. But anyway, so you were just a sucker bet on a market maker, right? But anyways, so these guys, what they said is, well, why don't we pay for orders like a market maker instead of the fee on BATS exchange is, let's just say, $7 a trade. So that would be your cost. Instead, Renaissance said over here, we'll pay you $7. We'll pay you $7. So now the algo inside of the Bank of America server says, oh, well, if you throw the order to BATS first, we'll actually earn money. But they'll only get 1 share out of 1 million. But they're like, fill it. Meanwhile, these guys see it, well worth the $7, and then they'll put the rest of the order here, and they'll sucker it over there. But see, when this happens, then they go and buy it for $187.22, and a millionth of a second later, sell it to you for $182.28. And they made free money. But it cost them $7 to flash you the order. Huh? And at the time that I was learning about this process, I think it was Renaissance Capital made something like, 4 million trades in a row without losing money. Now, let me tell you, does that sound like fair? Like it's fair? Like, does that sound like a normal thing? You're like, that What? I mean, you can be good, you can be smart, you can be talented, but 4 million trades without even a penny lost, or not even a penny lost, not even a drawdown, because you're only holding the trade for a millionth of a second. So you didn't even have a drawdown. You made a million trades in a row with instant profit. Okay, you're like, okay, something doesn't seem right. Huh? So it got to a point where traders figured this out, especially the bankers now, and they want in on it. So you would have a trader in New York City. And now on things like commodities, for example, you had Chicago, where all the exchanges are for commodities, okay? But for some reason, outside of Chicago by 300 miles, there is a little server here acting as an exchange. And for some reason, like 80% of the order flow, went through this tiny little, server somewhere, literally a building in the countryside, in a farmer's field. Like if you went to visit this exchange covering 82% of the order flow for wheat, for example, it went through this little box sitting in a farmer's field somewhere. And it turned out they were paying people's commissions for them. Right? Once again, why would this be commission free or even pay you $7 instead of charging you $7? Why would they do that? Because they're getting the orders and then selling them to somebody. So then somebody involved with this, okay, the difference between Chicago and New York City is probably 1,800 miles or something, right? They're not close together. Okay? Okay, it would take you a full day to drive from Chicago to New York City, assuming you didn't sleep and you're doing freeway speeds. Okay? But anyways, somebody, okay, this is amazing now, took fiber optic cable, and in a perfect straight line, fiber optic for the fastest latency, connected New York City. They had to buy their way through farmers' fields. No, underground, not towers, underground fiber optic. They dug a hole through farmers' fields, thousands of miles of farmers' fields, through little rural towns, across rivers, under bridges, and even through limestone mountains. So they get to the mountain and they don't want to go over it. They certainly don't want to go under it because they're trying to get perfect latency, perfectly straight line. And so they would find somebody like a company that can drill through stone and through mountains. And they're like, you can't drill through this. This is limestone. You can't drill through that. It's going to take us 10 times longer and it's going to cost 20 times more money. And they're like, do it anyways. Do it anyways. And they drilled through mountains. They went through paying every farmer, paying every town, paying all the regulatory agencies that had to oversee this, right? Doing everything. Monstrous. And then the guy that did it walked into the banks in New York City and said, I have 20 available spots on this fiber optic cable that will give you a direct link. Okay? I want 10 million in cash right now, and then it'll be $1 million a month subscription fee. And, right? And the bankers would look at them and he said, how many of the 20 spots would you like? But there's only 20 spots. You can buy them all and that's it. You can buy half of them, you can buy one. But once I leave this room, you're out. And I'm going to cross the street and I'm going to talk to your competitor and they're going to make a decision, one or all or some. One, some, or all. And if they just take it all while you're thinking about it over lunch, they get it all and you're out. And they all signed up. Why? It's free frickin' money. Amazing, huh? Meanwhile, what were you doing? Huh? You're like, oh, I found this new thing called Facebook. I can post pictures of my children and of my cat. And I'll share, words of affinity with all my friends. Michael Jordan said he never lost a game. He only ran out of time. That's so inspirational. Dude, Facebook is awesome. Oh my God. Huh? Anyways, I don't like Facebook. What can I say? So that's how some of the markets worked. Okay? Winston Churchill once said, like, oh my God. Okay? Anyways, that's that. I'm feeling bitchy, huh? Feeling bitchy. All right. So some of you guys asked for the link to the new bootcamp membership and I gave it to you and you didn't sign up. So what's the problem? Come on now. One of the guys who worked on it is Canadian. There's a Canadian everywhere. Okay. Yeah, it was probably Ryan Reynolds. Yeah, no, I don't subscribe to the meta concept. I mean, I suppose if the world gets crushed by a never-ending pandemic where you're never allowed to leave your house, right? Then yeah, we'll put a helmet on and share pictures of our cats and watch pornography. But other than that, I think most people like to go outside, right? I mean, think about it. Like we were talking about boards, being on a board of directors or a board of advisors. And somebody said, and it might have been Bill Gates, like, oh man, everyone's just going to do metaverse and you can do board meetings wearing a helmet and we can all collaborate. I'm like, dude, think about it. Why do people join boards? One, they want to meet people and develop relationships. Right? Two, they get free money for giving advice that no one's going to listen to, and they just pocket the cash, so it's an easy gig. Right? And then three, man, you get to fly to the board meeting, stay at a Ritz-Carlton, do the board meeting, and then go out and get drunk and have a $1,000 dinner. Charge it to the board. Oh my God, you get a big steak dinner and Chateauneuf de Pape, right? Like, that's why people do it. That's why they've always done it. That's why someone came up with the idea of like, why do we need a board of directors? I don't know. We need more steak dinners. Right? I mean, dude, so like when you get Bill Gates saying, well, I'd rather wear a helmet than meet people in person. All right. Yes, there are people like that in the world. But for everybody else, yeah, everybody loves the business trip, the fancy hotel, the first class airline ticket, the steak dinner, the bottles of wine, and then whatever you do after that is your choice, because you always see like most board members go home and then some people go do something like, where are they going? Strip club, right? So you're like, dude, that's been going on for 150 to 200 years that boards of advisors have been working. Like, that ain't going away. But if you'd rather play your, put on your Oculus and play a video game version of real life, I think that's the minority of people. And from what I can tell, Zuckerberg never had any friends at Harvard. So that makes sense that he'd rather put some goggles on and have a virtual friend. Boy, that's bitchy, huh? Gee whiz, Wayne, that's bitchy. Hey, man, it's been a long week. Dwayne says, for the last 3 years, yeah. Hey, man, but that's not a goodbye, is it? That sounds like a goodbye. Feels like you're giving me a hug. You're like, yeah, man, that was great. Yeah. Anyways, hope it's not goodbye, man. We got work to do, right? Yeah, what's up, Raj? Yeah. God, Raj, man, I'm in full-on bitch mode today. Anyways, I'm a lover. I have a big heart. I'm a teddy bear. So I guess we'll leave it there before, I'll just leave it there before I go after you. Before I put Roger on the chopping board, before I put my foot in my mouth, which I've probably only done 5 times today. We went through the markets. I explained to you that there's a lot of technical setups that are still valid, like this one that we're looking at. It's still valid. It's still a good trade, guys. It's not over. I explained why I think we have rotation, but not a collapse in the market. A rotation, a shift in sort of like a shift along the curve, but not a shift of the curve. So I'm trying to get you to look at all the components, the bond market, the stock market, and all that kind of stuff, and be able to read it and understand what's happening, who's doing it, why they're doing it, and what is likely to happen in the future. That's not a small feat, but just something like that today. I thought we read the market like you need to read tea leaves. Okay? So I hope you appreciate that. I don't know how many YouTubers do that. I don't know any other YouTubers, right? But I think that's a pretty high level piece of analysis, and I hope it was at least entertaining. I also showed you, we discussed dark pools, but I also did the overview of flashing orders and front running, and that part might actually be somewhat illegal. They're front running because they already know the order's there. But they're doing it in a weird way that there's no law against it. There might be now because that's sort of an old process. But one of the things I want you to learn is people were paying to see order flows to front run. Then you look at Robinhood, and I was laughing when people were flooding to that to buy meme stocks. They're like, it's free. Dude, nothing's free, dum-dum, right? Nothing's free. And what you find out is they were flashing orders. They were paying Robinhood, they meaning market makers, were paying Robinhood to see your flow so they can front run you and make money. They were, oh my God, like they would buy something and sell you something in less than a second, less than a millionth of a second, because and here's the worst thing, and I don't know anything about Robinhood, but the worst case scenario is if they send out an email to your clients like, today's trade of the day, you should buy Apple stock. But meanwhile, that actual order came from the market maker itself, or the market maker calls Robinhood. I don't know if this happened. I don't know. I'm saying, but it's plausible that it could have happened. It's the danger of this type of thing where the market maker calls Robinhood and they're like, all right, we need 1 million, okay? We need to dump 1 million Apple shares today. And they're like, okay, we got you, bro. And then they send out to their clients, the trade of the day is everybody should buy Apple. Meanwhile, the market maker is the one that wants to dump it. You understand, like, the conflict of interest that could lead to? The same way the Flash Boys were front-running orders only when they knew the order existed. As close to insider trading as you can get without being an insider. But on the other side, the market, like, dude, that could have been a problem. So again, I don't know if that happened, but 2 or 3 years ago when Robinhood was a big thing, I'm like, dude, you got to be careful because nothing is free. You might be somebody's sucker. Okay? You might be. I don't know. But boy, oh boy, oh boy, oh boy. Interesting how all this works. By the way, that model is only legal in the United States. It's illegal everywhere else. So I guess I don't know anything about Robinhood. Like I said, I don't trade that way. But let me ask you guys, just out of curiosity now, can you open up a Robinhood account if you live in the UK? Or is it in America only? If you're in Paris, can you like open up a Robinhood account and start flipping meme stocks on your cell phone? You're like, I don't know why I'm buying it, but I'm buying it. Oh, you can? Okay, I didn't know because I thought that was illegal. That model of selling orders to market makers. So I honestly didn't know. That's why I asked. It's just, dude, when I buy stocks, I do it through a major bank, right? Yeah. So I don't do it through a phone app. And I think it's even wrong for them to tell you it's free. Okay? Because that'd be like a Forex broker saying, oh, trading Forex is free. We just have a spread. Well, the spread is a fee, right? So Forex isn't free. There's just a spread. So Darko says in Germany, no. Yeah, well, right? In that case, guys, the reason you can't do it is it's illegal to sell the orders to a market maker in other countries. So it's weird, right? It's weird, right? But whatever. Yeah. So anyway, so I wish you the best. I hope this was entertaining. I hope it was educational. I hope it was at least barely digestible and interesting. And the holidays are here, man. So I will do my daily webinar, I think. I don't know. I haven't decided. Probably, almost certainly. Okay. So I'll be around next week. I'm around. I'm going to do my outlook. So join FX Bootcamp. Rejoin FX Bootcamp. Okay. Mahir says, I don't think Robinhood phrases it that way. I think they did, though. In the early days, like, trade stocks for free. So anyways, I'm like, yeah, I got a big problem with that because nothing's free. What are they doing it for? Altruism? Oh, let's start a nonprofit broker and give everybody access to stocks for free. We'll just lose money on every trade. Like, dude, it's ridiculous, but people signed up because people are ridiculous. Okay? Remember, people is smart. So anyways, that was that. Have a wonderful weekend. I hope you have a wonderful time with your family and your friends. Get some R&R. Don't turn your backs on the market. We still got work to do. You can still make some money. So make sure you're at your desk, all that kind of stuff. But you're on your own. This is your opportunity to be the trader you've always wanted to be. And like I said, you can email me, wayne@fxbootcamp.com if you need help, all that kind of stuff. And for everybody else, man, maybe I'll just see you on Monday at Forex.Today, and we'll keep in touch that way. Great. Okay, great. So anyways, Peace on earth. May the pips be with you. May your profits be above average. Happy holidays. Cheers.